So a guy walks into a bar, and his buddy that's with him says, "Hey, watch out for that bar." Hey guys, it's your favorite talking head, NoNonsense financial coach. Talking about stocks today, and I want to kind of gear this investing series a little more towards kind of what you can invest in and just understanding stocks versus mutual funds versus index funds. All that fun stuff. So individual stocks. So I talked already about this. Companies, when they go public, they offer a certain number of shares or stocks, and essentially each stock gives you a percentage of ownership in the company. So if a company issues 10 stocks, or let's say 100 stocks, and you buy one, you own a 1% share in that company. Usually companies have tens of millions of shares issued. So in your, investment accounts, whether you use Fidelity or Vanguard or Schwab or whatever, you fund your account with money, transfer money in there. You go into your Fidelity account. You can say, I want to buy a share of Apple stock, and you go in and Apple's trading at $67 a share. Or, I'd have that confused, but you pay $167 for the share, and you get one share and whatever the associated percentage of ownership of the company is. I don't have anything against somebody owning individual stocks. I think it needs to be done in a really careful way, understanding the risks associated with it. So in the investing world, there's what are called sectors, and there's 11 of them. It's GICS, G-I-C-S, and for the life of me, I can't remember what that stands for. It's basically the categories of industry that are recognized globally, and there's 11 of them. Dare I try to recite them all? Okay, so you've got energy and utilities, materials and industrials, healthcare and financials, the two consumer, discretionary and staples, communications and IT, and real estate. That's only 10. I'm missing one. Anyways, there's 11 sectors, and companies fall into these different sectors. So Microsoft and Apple, I think they fall into IT. Verizon and AT&T, they fall into communications. Bank of America and Wells Fargo, they're financials. Pfizer, Moderna, Johnson & Johnson, they're healthcare. You get the idea. If you're going to play the individual stock game, and just Andrew's opinion here, I don't think you should do the day trading. There's a lot of things that go along with that. There's a lot of things you need to understand as far as laws and tax concerns. It's just kind of messy. So, buying low and selling high day to day, man, it just gives me ulcers. So I would not recommend that. If you're going to buy individual stocks, I think it's a good idea to just buy and hold for the rest of your life. So find companies that you like, find companies you think are going to do well over the next 30 or 40 years, and you should be good. Beyond that, diversification is the diversification. It's the crux of this. So let's use Tesla as an example. Tesla's just grown, astronomically in the last 10 years. I think if you put $1,000 in Tesla 10 years ago, you'd probably be sitting on close to $1 million right now. Just insane. 10 years from now, Tesla might not exist. Okay, so if you drop all your eggs in one basket and that basket falls, all your eggs are going to crack. You're going to lose every dollar that you put into them, and you have no recourse. You have no way of getting that money back. So diversifying, there's a couple of things to think about here. One is diversification across the sectors, right? So the 11 sectors. So basically what you'd want to do is find companies within each of those sectors. So if you're going to do a company in each sector, you're already looking at 11 stocks that you need to research, look at the company, see if it's something you like, see if it's something you support, and buy into those companies. Now, diversification across 11 individual stocks still doesn't quite sit right with me. I don't think I'd be comfortable sleeping at night with that. And so if I were going to do individual stocks, I'd probably want at least 2 companies in each of those categories. So for communications, you could do AT&T and Verizon. Let's see, I don't know if Home Depot and Lowe's would be in industrials or materials, but that, healthcare, Johnson & Johnson, Moderna, Pfizer. So there's diversification within each sector. You can, find a couple of companies within each. I'd be a lot more comfortable with 3 in each individual sector. But there's more to the story, right? This is just U.S. companies. If you want to diversify even more, it's always recommended to include international. So you're going, okay, I'm already up to 33 individual stocks, and now I got to go international. So it's like, okay, well, I'll find 11 stocks that fit into each one of these categories that are outside the U.S. Now you're up to 44 stocks. Well, okay, but, do you want your international diversification just in one company per sector? I don't know. I don't know that I'd sleep super comfortably. I'd sleep a lot better at night with 44 stocks versus 11. But there's something about that. There feels like an inherent risk. You go back to just having 11 stocks. If one of those stocks completely tanks, that's almost 10% of your portfolio. It's 9.10% or something like that. I don't like that. So I'm not necessarily saying you shouldn't do individual stocks, but just understanding what the risks are and also understanding how much work it's going to take. Managing 30, 40, 50 stocks, the ups and downs, that's a thing. That's a part-time job at best, a full-time job at worst. And if you're the kind of person that's just looking for diversification, you're not so much into tracking what's this individual company doing, okay, I've had them for 10 years, do I like the direction they're heading, or do I think I want to sell them and maybe pick another stock to replace that? That's something you got to take into account when you're doing this. And it can be a lot of work. So just a quick rundown of individual stocks. My next one's going to be about mutual funds, which is kind of the alternative to individual stocks, where you can, buy into one fund, and with that one fund comes all the diversification you need. I cannot say diversification today. Diversification. So that's kind of it on single stocks. Thanks for tuning in, guys. Look for my video tomorrow. It'll be about mutual funds, and then after that, probably index funds, and then after that, probably ETFs. And then, I don't know, we'll get creative. Talk about small cap, mid cap, large cap, blend, growth, value. Maybe we'll get into some REITs, some annuities, and all this fun stuff. 8 minutes, probably enough for a video on stocks. Thanks, guys. Like, comment, subscribe. Interact with the channel. Share with all your friends and be like, there's this goofy guy on YouTube that thinks he knows anything about anything, and it's just comical to watch him. Plus, nothing else, I got good jokes, right? There's a guy walks into a bar. His buddy says to him, hey, watch out for that bar. Did you see what I did there? Thanks, guys.